Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Friday, June the 1st, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses. We do create multiple hypotheses. We do not know what the market's going to do. Therefore, we create two main hypotheses and two alternative hypotheses. By the way, beautiful, nice little FUBAR, Mr. Sneaky. I hope the members took this trade. I did not because I've got my gold going right now. Sorry, let me get back on track. We create two main hypotheses in order to have a plan in place. Then we wait for the market to open up and show us who's in control, and then we execute the plan that best suits our market. Then we have our alternative 3 and 4 hypos, which are our expansion plans for when we go into a trending type scenario. And sometimes we have an alternative, which is usually a consolidation day and sideways movement. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to in the pre-market, and then we do live trading and analysis during the course of the regular trading hours. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please visit my YouTube channel, Quantum Leap Futures. You can view these pre-market sessions. There's probably 4 or 5 years of them up there. You can get an idea of what we do each morning. I do have context that I go through for our members. This is creating a routine. I don't vary from it. A lot of people don't like the fact that my hypos are usually about 15 minutes into the video if you just want to skip ahead. But I think it's important to understand where the levels and where the hypos are coming from, and that's why we go through our daily context and our daily routine. So let's start with the economic report. Of course, we just had NFP. We had a better than expected non-farm payroll. Expected 189, came out at 223. Employment rate came out as a beat as well, 3.8. Private non-farm came out as a beat as well, 218. Manufacturing payrolls was a little bit of a miss, but in the most part, this is a positive report. Why did the market drop? Well, the market's concerned that with a heated jobs market, that the Fed is going to raise rates in June in just a week, I think, a week or 2 weeks. But that's, you never know how the market's going to respond to good news or bad news. And you can see on good news, they took a nice little dip, and now they worked their way back. We've got FOMC, Kashkari speaking in 4 minutes. We've got RBC Manufacturing, PMI in Canada coming up in 39 minutes. 54 minutes, we've got Manufacturing PMI, and then at 10 o'clock, we've got the ISM Manufacturing PMI. That'll be the next big news. And then 1 o'clock, we've got the rig count, the Baker's Hughes, and basically we've got vehicle sales coming out through the course of the day, as well as truck sales. So just a smattering of news. Of course, we also have the headline news with North Korea, with Italy, with China, with the tariffs. A lot of the European countries and us here in Canada are fighting back and putting our own tariffs as retaliation. So we'll see how the market handles these things. This was just a beautiful FUBAR, Mr. Sneaky setup. There's your FUBAR, creates the technical gap against the 9. You get your volume spike, and then you get your opposing force coming in on the inside bar. Your entry bar would be here, and you get the nice reversal. And here we are coming up and putting in new highs for the day. So let's take a look at yesterday. Yesterday, our Hypo 1 was an open auction in range. It pushed down to the 18, possibly the 13, and then find buyers down there, and then rotate up to close the naked VPOC and the naked close with a possible late day probe up into the 35.75. That did not happen. Hypo 2 was an open auction in range, a push up to close the naked VPOC and naked close, a failed breakout, and then a move down into the 18, chop around the 18, and then push down to the 9 area, possibly the 3, and maybe a dip down below. I was thinking 98.50, but finding buyers and rotating up and closing somewhere between the 13 and the 18. We kind of got Hypo 2, but it looked like we were going to be in Hypo 1 with this move down, and then they came back up here, and then we had that news. And again, if there's one thing you guys ever get out of me or Quantum Leap, it's the FUBAR Mr. Sneaky Tech Gap. Okay, just showed you one on the news. Here's one on the high of the day yesterday. There's the FUBAR, accompanied by the volume spike, then the inside bar, your technical gap against the 9. What do we get? We get a rotation down, and you could have got nice continuation. Then look what happens at the low. FUBAR, volume spike, creates the technical gap, inside bar, opposing force. Okay, entry bar, rotation up. Now the primary target is always the technical gap close, because sometimes they'll come up and close the gap against the 9 EMA and then rotate and go in a continuation pattern. But we always leave runners on for possible continuation. So here is a very good example. If you go and review a lot of charts, a lot of times you'll find a FUBAR Mr. Sneaky at the high, FUBAR Mr. Sneaky at the low of major turns or day highs and day lows. So just keep an eye out for that pattern. It is steeped in auction logic. It is a candlestick pattern, but you have to understand what the candles are telling you. Okay, so we did get the move up, but we didn't close the naked close or naked VPOC. And then once we started rotating down and not holding the open, we were shifting into the Hypo 2 and looking for that move down into the 03 area and possibly a dip. I was thinking down to test the 98.50. They got as low as 99.75, and then they rotated back up. And we didn't quite get the move up into the 13 area to 15 or to the 18 area. I was thinking we'd close up here, but we didn't. But that's the market, and your levels and your hypotheses are never going to be dead on, but you got areas that you're looking for, and you're looking for the probabilities of where the market's going to go based on how they hold the levels, how the auction order flow looks at those levels, and you can see our level up above, this level right here where they fought, and then they break through, they come down to our key line in the sand, dip below, and then pop right back up. That tells me that any push back to this level is likely to hold, and you get the rotation back up. So each morning I do the same routine. I start with a macro to micro approach. I use a simple candlestick chart. I start on the monthly. I use a 9 EMA and a 20 SMA on all my charts. I don't trade off of them. I use them to give me guidance in terms of where we are in the trend, with the exception of the double Renko reversal, which is a reversion to the mean type trading back to the 9 EMA. So what I'm doing here is I'm going through the process of understanding where we are in the different time frames, so I don't get my bias wrong, or I don't get my bias too short of a time period. Because what I'm trying to do is get in, lay off risk, and build my Theo so I can participate in larger time frame rotations. So what I'm looking here is the monthly's got very strong slope and separation. Prices paralleling the 9. We had 14 months of one-time framing up. February, they violated that one-time framing. They came down, and they've been challenging the trend on the monthly, but they've not been able to close below the 9. That tells me the trend is still very much intact. And here we are, the beginning of June, and we're back above the 9 again, and we got slope and separation. This does not even start to get challenged until we get below the 2654 area. And it doesn't get violated until we get into the low 2500s. So any dip is just a dip on the bigger picture. Going to the weekly, it looked like we were going to get a rollover and a start of a downward trend, but what did they do in the last 7 weeks? They come up and get back above the 9. Now they're back above the 9 and the 20. The 9 is lagging right now. We are seeing some weakness, but the buyers still keeping us in above the year open. The year open being 26.75 and a quarter on the full session. So the trend is weakening here, and we're in this consolidation, which I'll show you on the composite chart. But the trend is still intact. Going to the daily, same thing on the daily. We've got this symmetrical triangle. We're in a consolidation and trying to hold the 2700s for a break higher back towards that unequalized high in the 2800s. Going to the, so we're coming to, just a note on this, we're coming to what I call a MA KISS, and this is usually where we're going to get the breakout. So is Friday going to be the breakout? We don't know, but it is setting up for a directional move as a possibility today. Going to the intraday, you can see that it looked like we were getting this downward trend, and then they take it right back, they fight it, and now we're back above the 9 and the 20 and getting possible continuation to the upside. Going to the 30-minute, you can see that we are in an upward trend on the 30-minute, a quick dip down, test the 9 or the 20, did not break it, and we're getting continuation up on good slope and good separation. So taking a look at the structure, and I'm just going to do a little bit of narrative so you understand the context. We have this big move up. We get this big move up into new all-time highs. The all-time high is actually in the Globex at 28.83 and a quarter adjusted to the June contract, and our all-time high in the regular trading session is at 28.80 and a quarter. This is an unequalized all-time high. Statistically speaking, this will not hold, this 28.80 and a quarter. That 28.83 and a quarter will get challenged. When? I don't know. And then we tried to hold value up here in the 2800s, and they fail. They get the gap down, and we come down, and we come all the way down into a prior price acceptance, which basically was near the start of this whole run-up. And then the buyers step in. We try to get back up into the 2800s, and here where they tried to hold value, the last place they tried to hold value, they get back up there, and the sellers step in again, and we fail. Then we come back in, and since then all we've been doing is chopping around in this large value area, testing below and testing above, but still coiling. Now, a couple things has happened. The composite VPOC from the February the 2nd shifted from the 69 area up into the 18 area. That's significant because price is being accepted higher, okay? And then we get this shorter time frame from the May 9th, and they test both sides of this, testing back down to the microcomposite VPOC here, okay, and then they find buyers again. Now we're coming up, okay, and we've been in this 3-day chop, and the 3-day microcomposite VPOC is at 2706. Where did they try to hold value the last time they were up here? right around this 2706. This is a pattern that plays out over and over and over again. They go from balance to imbalance, back to prior balance and price acceptance before they make the next move. So now we have the microcomposite VPOC of this composite going from the 9th through to today in acceptance with the longer time frame microcomposite. We were talking about the importance of holding this level yesterday. Same thing today. We've got to hold this level. We've got to accept this price and get the breakout of value, and that's going to happen in around the 27.30 and a quarter, and then we can possibly go into price discovery again and get the breakout to the upside. Of course, the key line in the sand is not going to shift. It's still going to be the 41.75. That takes us out of the value area of the bigger picture, and until that happens, it's all just chop inside of here and a maturing of the auction and a price acceptance. You can see down here how we have all these high volume nodes. This is undetermined fair value. We had it here, but now it's maturing better, and we're seeing a price dominance, price acceptance in around the 18-19 area, and hopefully we can hold that today and push through and get back above last month's high, which was at the 41.75. We keep coming up here and fighting this and failing. Key levels to pay attention to, well, right now, 2706 on the downside. The key line in the sand is still going to be actually, I'm going to move it down to the 26.98 and a quarter. 03 is still going to be important, but I'm going to move it down just because we've got a better defined CLVN down here. Below that, targeting 91 and 84. 84 becomes our major support level. If not, a move back down into the 69 area is probable. To the upside, pay attention to yesterday's high, of course, but I'm watching this 30 and a quarter for the breakout and a possible move to the other side of the balance up here at the 41.75. Taking a look at the overnight inventory. Oh, whoops. Overnight inventory is basically 100% net long. And, you can see that the market went sideways until we basically got into the European session, and then we get this this nice move up. We've got a double distribution with a key LVN right here at the just below the mid at the 13 level. Our VPOC shift up. You can see the VPOC has been shifting up all session, and now we're going in and we just put in a new high, and we've got this naked VPOC up here at the 25 and a quarter from 2 days ago. So in terms of the levels, let's get our levels in here. Our overnight low is 2706. I'm sorry, 2705. Our 20-period daily average true range is running at 29.05. So our upside daily ATR is up here at the 27.34. So we've got room to go up. Our current overnight high, which could shift at 23 and a quarter. So we'll just have to make the adjustment if we have to after we're done here, but I've got to give you the information I've got right now. So at 27.23 and a quarter minus the average true range of 29.05, 26.94 and a quarter is our daily downside ATR. And our overnight VPOC is not likely going to shift. Look at it's right in line right there at the 18 and a quarter. This is lining up. We've got those basically those two longer time frame microcomposites from the February the 2nd and the May the 9th right there as well. And then I want to make sure I've got this 13 marked in. I had the 11. I'm going to shift this up into 13. This is also the FOMC from May the 23rd. We have to put in our non-farm payroll, scene of the crime. Where is that? Right there at that 18. This is getting very cluttered, but I got 1875 as the, this is NFP 061 crime. All right, and all my levels are good to go. All right, so what are the hypotheses? Let me just do this a little bit different today. I don't usually like using my drawing tool, but somebody sent me an email again about it. Oh, I gotta move my key line in the sand down to the 98. I'll just trade these around. It becomes 0175. This becomes 98. Whoops, not that one. Sometimes it's hard moving these around. I know I'm taking a long time, but again, like I said, I was trading. Okay. So overnight inventory is net long. Let me just get my drawing tool here. So I'm looking for a balancing on the inventory. We're going to be fighting this high here. So I'm looking for an open auction just out of range or just in range. I'm looking for a wide open swing, and then I'm looking for a move down into the 13 level, chop in this area, and then start our way back up and pushing up towards this 35. And that is hypo 1. Pretty basic. Then hypo 2 is going to be a open auction, just in range, just out of range, a push up. Okay, take out the naked close that gap, and then fail to get above the prior week high. Find sellers. I'm not very good at drawing. Push down into the 13 level, chop here, and then push down into this 05, and then start to base and work our way back up and close somewhere in around the 13. That is hypo 2. Again, not very good with drawing. Hypo 3 is going to be a gap and go day, open auction, just in range or just out of range, come down, okay, fail to get inside of the value area or just dip inside of the value area, and then push up into the 29, chop here, push up to the 35, and then start drifting up into the close and going up. And sorry, you can't see this because I'm off the page, but basically a move to the gap and the 68% move back up from the high to the low. Let me just show you that, but back up in here, and then closing somewhere in around the 35. That is hypo 3. And what I mean by that is this whole move down from the all-time high to this last fractal low down here, the 61.8% retracement is at the 49.75, which is right above the mid of that gap zone. That's what's wrong chart. Right above the mid of that gap zone. So that is hypo 3. And then hypo 4 is a breakdown day. I think it's less likely in the context, but an open auction, failed to hold outside of yesterday's range, come right back down into the 13 level, chop here, push through, close the naked VPOC, and then break through the key line in the sand and push down into this 88 and close somewhere down here in the 2600s. And that is hypo 4. But again, it's less likely than my hypo 1, 2, or 3. So that's my hypotheses for ES. Going over to gold quickly. This is on the Q contract, the August contract, and you can see that that we've moved back down into. We failed to hold the 1300. I said if we didn't hold the 1300 this time around, where would we go? We'd come down into this 95.90. Why did I buy this area on the news? Well, simply because of the fact that we're not getting away from this, and I'm expecting a bounce back up to the 1300 level if we don't fail to hold below the 95.90. So right now I've got one contract running from 94.2 with a stop at 94.9, and we'll see. But I'm already scaled a couple times on this, so I've got risk off, so I can just hold this. I'm hoping to get a $10 to $15 move on my runner, but I have to hold this 95.90. If it gets below it, I'm probably done, and we're probably going to dip a little bit lower. Key levels to pay attention to: 1301, 95.9. The value area of the micro composite down here at the 92 area. Below that, look for the move down into the 84, 83 area. If we get above this 1301, I'm expecting to move up into the 1305, and that's what I'm hoping for today. Test the upper side of the value area up here in the CHVN at 1305. That's going to complete our pre-market session. Sorry this was a long one. As always, trade well, trade safe, and we will catch you on the flip side.